Top 5 gainers. A total of about 27 stocks are advancing and the rest are in the red, amongst which Jindal Steel and Power is hit the worst. It's down 2.5%, followed by Tata Steel, SS Sterlite, Tata Power and BPCL. So it's the metals pack which is taking the hit in today's session. So that's the breadth of the Nifty and what's been happening with regards to individual stocks. Let's bring in Dilip Bhat, the Joint Managing Director at Prabhudas Lilladher, joining us right now with his market opinion. Thanks very much for joining in, Dilip. Firstly, getting a sense and a gauge of what happened in the interim budget and how did you read into the measures taken by the Finance Minister?
Well, I think it was very much in lines. Nothing really great was expected because of the vote on account. And I think except for the SOPs which he has given in the automobile sector, by and large, I think it has moved on the expected lines. I think more important is what everybody knows, that he has managed to rein in fiscal deficit at 4.6%. And I think another part which really needs a very close scrutiny, of course, is the cut in the plan expenditure, which last year was about 1 lakh crore, the cut in plan expenditure. This year, I think it has been cut by almost about 75,000 crores. So I think that also remains a challenge for any finance minister. How do you balance fiscal deficit? How do you cut the plan expenditure? How do you revive growth? And how do you still manage the inflation? So I think that is what we have been juggling and grappling with for the last couple of years now, and probably that will continue in the foreseeable future. As far as the markets are concerned, I think we are still tracking what's happening internationally, because more or less the last 1 week or 10 days we have seen that the international events really are having an impact on the Indian markets in the short run. And maybe even going forward, maybe till end of March, I think they will still continue to dominate the Indian markets. So I think markets still are a little hesitant. I think around 6,150, 6,200, certainly it looks a little heavy. So I would still be a little apprehensive that markets probably will not run away from the current levels, and maybe they will remain vulnerable to come down more from the current levels, maybe to around a little under 6,000 in the next fortnight or a month. I think a pre-election rally can be expected just maybe towards the end of March or beginning April.
But just the fact that, you know, prior to the vote on account, the despair that you saw in the markets, I mean, looking at how the indices saw a clamp down almost on a daily basis, do you think that has changed at least the initial sentiment?
Sorry, I think, can you just repeat that question if you don't mind?
Yeah, I was asking you about the sentiment shift. Do you see at least that taking place now, considering that prior to the vote of account there was, you know, almost on a daily basis you saw that discomfort in the market and a little bit of despair and uncertainty. As soon as the market started to take its move up, the second half, you know, pulled it right back down?
Well, I think the sense of discomfort was generally coming from the way some of the events which are happening internationally. So the vote on account probably had assuaged some kind of feelings as far as the fears were concerned, that nothing untoward is going to be reported. But by and large, market still remains a little apprehensive and a little fearful of what's really happening in terms of tapering off. So I think those fears probably may not have really gone away totally, and probably they are still lurking somewhere around the corner. And I think the FII inflow, which was a good tailwind in the last couple of years, probably if you see just yesterday's figures, there is some positive FII flow. But otherwise, I think by and large that also remains an area of concern for the markets, because without their supports, markets are really wide open in terms of vulnerability.
Okay. What are you advising, Dilip, in terms of stocks to clients? I believe you've got quite a list here on L&T, Wipro, Tata Motors. You've got a buy call for the large caps, mid caps. You like Cummins India, KPIT?
Well, I think as the main reason, some of the logic that goes behind some of our recommendations are that we still believe that one needs to be a little more defensive in the approach rather than be a little more aggressive, because I think the way the events are at the moment, I think a lot of people are pricing in the fact that maybe we'll get a stable government. After all, we may still get it, but I think one has to be a little careful in the approach going forward. So I think that's how we are trying to position our portfolio. I think Larsen Toubro really looks very defensive from the current levels, because we feel that that's a stock which really is perhaps the only one in that space in the construction, engineering and the capital goods which has got the balance sheet to execute any serious big orders. I think the rest, all the competitors probably are pretty in a bad shape or stressed out at the moment. So I think even in the bad times, their order inflow continues to be good, and if at all there is a revival that we all are talking about, I think Larsen Toubro will still be the best beneficiary. So in that sense, and Larsen Toubro looks good, and they're reasonably available at very reasonable valuations. So that's one stock that we like. I think Wipro is another one which is putting its acts together. After a long time, they have been striking some good deals. There are good inflow of the deals at the moment. So I think the operating leverage would now start coming in for whatever marketing spend that they have been doing in terms of the resources that they have acquired. So Wipro is another stock in the frontline IT which can really give a reasonably good appreciation at the moment. I think broadly, if I just were to look at some of the mid caps, I think Cummins looks very interesting from the current levels. I think that has got a good blend of exports as well as the domestic market, and both I think probably are reasonably good. Even at the current levels, when the sales are taking a fall, they are still generating free cash. I think the capital intensity of the business still is very much under control. So all that taken together, I think Cummins also looks pretty interesting. And I think in the mid-cap space, we still like NIT and KPIT, both of them in the IT space. Once again, reasonable growth of around 18-20% and reasonably good cash flow generation and ROAs. And they're still available very, very reasonable as compared to the frontline ITs. So that's what really makes us feel that these are the stocks which can give a good defense, but at the same time, if the markets were to be on a roll, they will give a reasonably good appreciation.
Alright, you had one more stock, Tata Motors.
Sure. I think Tata Motors, as what we feel that the JLR is really giving them a good support at the moment. Overall, the numbers, as we all know that almost 90 to 95% of the operating profits are being contributed by JLR, and that number still continues to be in a very comfortable zone. They are showing a growth because they have got a wide basket of geography from where the growth is coming, and not really it's connected with one particular country here or there. I think it's a good mix of the geography which is really contributing, and in that we expect is going to continue. I think as far as the HCVs are concerned, though they are not contributing much from the domestic front, but possibly I think the worst is behind us in terms of the prospect. So they also will start contributing sooner or later. But most important is the valuation is still in favor of Tata Motors at the moment. I think it's in the frontline stocks, considering its ROE and considering the PE at which it is trading and the cash flows that the company is generating, I think this stock still looks a reasonable bet to have in your frontline portfolio.
Got that. Dilip, thanks very much for joining us. Really appreciate you taking out the time. Dilip Bhat there of Prabhudas Lilladher.
Always a pleasure.
With some stock ideas. Let's also look at the Sensex futures. All right, that's the futures for you. 0.1% higher at 20,687. So right now the premium has come off significantly. It's been petering off. We're almost towards the fag end of the month, so 9 odd points in terms of premium is what you've got. You'll be approaching expiry very soon. And also looking at the kind of volume action, that's starting to taper off too. So only 22,000 shares so far have gotten traded on the Feb futures, trading with a total open interest of 71,500 odd shares. The options have remained more muted in the last 1 week. There's been limited action out there. limited to maybe one or two strikes, which have protected that range of 19,800 and 20,800 on the upside within the calls. But as far as the activity goes, it's limited to the futures. And today's session as well, the average has been closer to about 35,000 shares, and today we're trading about 22,000 shares, which is slightly below average. Amongst calls and puts, today you are seeing some amount of put writing taking place, which is probably lending that support on the downside, and that's the trend over the last few days when the markets have started to recover. But let's see, for the intraday action at least, it's between this range of 19,800 to 20,800.